I feel like we're vindicated. Now, again, we're not totally home free yet. The next thing to watch is the 19B4s coming in. Those will be final. The first final 19B4 we've seen, I think that's ipso facto approval. It's still informal, but it's basically home free. But not until the SEC, I guess, writes their approval, puts it on the website. That's the formal approval. But I mean, my God, we're looking really good. We're still at 90%, but we're a very optimistic 90%. And now we've got mainstream media, Fox Business and Reuters in particular have done a lot of reporting, and Bloomberg on confirming and using their own sources to find the same thing that we're finding. So that's corroboration. That's also a good sign.
The U.S. Securities and Exchange Commission appears to be on the verge of approving several of the Bitcoin Exchange Traded Fund, ETF, applications before it. The latest update on the applications includes concerned exchanges submitting amended 19B4 filings on behalf of BlackRock, Grayscale, Fidelity, and some other applicants. The amended filings were submitted on Friday, and on Monday, the SEC began to publish notices of filing updates related to spot Bitcoin ETFs. On January 8th, the Commission's National Securities Exchange page listed amendments to 8 19B4 filings detailing proposed rule changes. The CBOE BZX Exchange submitted 6 updated filings concerning proposed rule changes through which it intends to list and trade ETFs from WisdomTree, VanEck, ARK Invest, Franklin Templeton, Fidelity, and Invesco Galaxy. NASDAQ also submitted similar updated filings for Valkyrie and NYSE Arca for Hashdex. There are currently 12 applicants seeking a spot Bitcoin ETF approval from the SEC, meaning other amendments are expected by Wednesday, January 10th, the deadline for the SEC to approve or deny ARK Invest's application. The latest amendments primarily address issues including the inclusion of surveillance sharing agreements, prevention of market manipulation, and whether relevant markets are of a significant size. According to Eric Balchunas and James Seyffart, Bloomberg ETF analysts who have proven to be veritable sources of information so far, this step is one of the final steps before the SEC's green light. The Bloomberg analysts are still certain of their over 90% chance of approval on Wednesday. Eric and James recently sat down for an interview with Natalie Brunell, during which they discussed the probabilities of the announcement of approvals on Wednesday, other important nuances about Bitcoin spot ETFs, and what to expect after the approval. We will now bring you clips from the interview. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks, and enjoy the video.
We heard, and other people have reported, that the SEC basically told all these issuers, fill out their documents are called S1s or prospectuses, their offering documents, what have you. They said, get us updated with all the feedback we gave you by December 29th. And there's been 11 filers that did this. So there's 11 filers that we're looking at that we think could launch when ultimately they are approved. We've been saying January 10th is the ultimate deadline since way back in June and July. So this has been months and months of us focused on this.
BlackRock was not employed, but asked by the Treasury to buy bond ETFs during the COVID crisis.
Right.
That's
and they made a killing.
Deal. They really helped support the whole market with the government. BlackRock is special. They're the biggest asset manager. Larry Fink is very integrated. A lot of people go in and out of the Treasury and the SEC who work at BlackRock. One guy from BlackRock used to work at the SEC, who was at the SEC meetings on behalf of BlackRock. There's a revolving door, and they're one of those firms. I think PIMCO is probably another one. Anyway, that's a big deal. BlackRock was also illogical. We weren't watching for them. Up at this point, the filers had been mid-tier companies. And BlackRock, this was against type. And so it was the against type nature of their size that we thought, what do they know? Why are they confident? I will say, in the end, we may have overvalued it a little bit, because if BlackRock could get anything they want from the government, in-kind creations and redemptions would be a thing, because they wanted that bad and they didn't get it. So this idea that Larry can just make a call is a little defeated by this. That said, BlackRock coming in was an event that just, I don't know, it's sort of just got everybody going again, and all these filings came in. The real big one was Grayscale. I got to give them credit. So for us, I think we went from 50 to 75 or 90 after, I think Grayscale got us to 90. That was the big one, them winning that court case. Those are the two major catalysts. But then the other one was after Grayscale won the case, and right around the Ether futures launching, we heard back channel that the SEC had actually started reaching out to go over the S1s for the spot ETFs and giving them comments. I think that's when we went from 75 to 90. That's when we were like, okay, this breaks the pattern of radio silence, delay, denial, which we've seen every cycle for 3 cycles for a decade.
Yep.
Them talking was like huge. And obviously that proved to be one of the best bellwethers that approval was going to happen, because why bother? Why not just be radio silence, write up your new reason for denial, and then drop it like a bomb on January 10th. The idea that these S1s are now like having all of these detailed technical things going in that are addressing SEC concerns is major. And
the one to look at right here is the ProShares Bitcoin Futures ETF, BITO. That thing launched, it got $1.5 billion in 2 days. It's the fastest ETF to $1 billion in history. Ironically, it beat out GLD, that gold ETF that Eric has been talking about. So that one had the record since 2003, 2004. So that was impressive. But the problem there was the SEC was a kingmaker. They allowed one ETF issuer to get one ETF out that offered exposure to Bitcoin futures, and they dominated. They got almost all the assets. They definitely have all of the trading volume around these products. And they just didn't want to do that again. So the SEC, since then, we had been hearing from many people that they don't want to be a kingmaker anymore. And we saw that play out with Ethereum futures ETFs. I know you don't care about Ethereum, but if you look at what happened, basically the SEC did everything in their power to not allow one issuer go out before the others. They basically accelerated all this stuff. They did a ton of work leading into a potential government shutdown to basically line everyone up and let all these issuers launch their Ethereum futures ETFs on the same day. So even before that, we thought the SEC was going to do the best they could to align these things. And honestly, the process, the 19B4 process that Eric spoke about, that's a rule change to allow Bitcoin ETFs to trade. That process is different from the futures ETFs. So the fact that it's harder, honestly, to line everyone up under the other process that the futures ETFs go under than it is for the spot ETFs, because they have a lot more levers they can pull and line people up. So we think, yes, it's not usual. This is new. The only time we've ever seen this done is Ethereum futures ETFs, but I don't know if it's going to continue. I think the Ethereum ETFs and the Bitcoin ETFs in this instance are unique in the sense that, as Eric talked about, this is a one-of-one situation. We've never had a decade plus of denials in the SEC. Basically, usually if you were the first to file and the SEC is going to approve it, you get to launch first, which makes sense. But when you've been denying a bunch of people that have spent millions of dollars trying to launch these products, and then all of a sudden you're going to let one person go first, that looks bad. It's anti-competitive. You're basically being a kingmaker. So that is definitely a unique situation going forward. But we do think that's what's going to happen. There's 11 now, as I mentioned, and we think 11 will theoretically get approval. And then it's up to them whether or not they're operationally ready to actually trade on day one.
With the approval of a spot Bitcoin ETF almost a certainty, Eric, James, and Natalie also discuss what happens next. Several experts and analysts have discussed the importance of the first few weeks after the approval. This is why many believe the SEC is trying to get several applicants ready at the same time, so some applicants are not given undue advantages. Firms like BlackRock, Fidelity, and Grayscale already have a huge advantage over others. BlackRock is the world's largest asset manager and the de facto chief spot Bitcoin ETF applicant. Fidelity is another large Wall Street player with thousands of wealthy and loyal institutional clients. Grayscale's Bitcoin Trust currently has a market cap of over $27 billion, and so on. All applicants are offering something unique that will make them desirable to clients, especially in the critical first few weeks after approval. This is why Eric and James are certain that the race is about to get really, really fierce. Here are more clips from the interview.
First of all, there's only room for one liquidity king. It's just the way it goes. There's going to be one ETF that just gets most of the organic volume. And once that one is sort of known as the one, more institutions and bigger investors will use it, and it'll just grow. It's like a snowball rolling downhill. And they all want to be that one. That's again why this is so fascinating. There can only be one volume beast. That one is set for life. It has immunity from the Vanguard effect. It never has to lower its fees, ever. Because when you're that liquid, people don't really care what you charge because they're going in and out. So GLD to this day is still 40 basis points. That's what it was day one. So you have pricing power, and that is beautiful. GLD is still the third or fourth highest revenue generating ETF. Still, even with many cheap ones on the market. That said, if you look at gold, there is a middle class. There's a 8 or 9 with over 100 million to, I don't know, 20 billion. I think IAU is probably 20 billion. And then there's even some that are like 50 to 100. But then there are a couple that have launched over the years. They're like just total losers and then they liquidate. So I'd look for one liquidity king, one respectable big one that may be on the cheaper side that advisors like who don't care about liquidity. And then like a bunch of middle class that use their own networks. Like even if you aren't the one, you still have your own clients who you know and love, and they'll buy your stuff and you can get a couple 100 million that way. So, and that's all you need to make a living. So if you get over 100 million, you're profitable pretty much. In this case, it could even be lower, maybe 70 million. So once you see that, they're going to hang around. There will be probably 1 or 2 sad cases that just can't get anything going, and they'll probably liquidate within a year or 2.
This is something that I've been kind of fixated on and figuring things out. They are going to differentiate in different ways. One thing I was talking about this morning is we're probably going to see some of these issuers will just it's going to matter what matters to you, right? Do you want to go with a crypto first company, somebody that's doing nothing but crypto ETFs and focused on that world, focused on Bitcoin, what have you? Or would you just want to use a name like BlackRock or Fidelity, right? So that's going to differentiate things. Also, some of these guys, I can guarantee you, some of these issuers are going to do like essential proof of reserves. Here is our address. You can see that we have the Bitcoin. Whereas some of these bigger guys aren't necessarily going to want to do that. They might think of it as operational security risk, what have you. So you're going to, this whole process is going to be like what Eric just described. I think it's a winner take most, right? There's like 1 or 2 at the top that are going to get most of the stuff, but there's plenty of room for multiple other people to eke out a good living offering these products to a certain subset of underlying investors. But again, we have a total of 14 filings. I think Global X is kind of bowed out. So now we're at 13 filings if you include Pando, which is a European ETF issuer. And then you also have 7RCC, which is trying to launch a spot Bitcoin ETF that holds carbon credits, which might help institutions who are worried about risk of ESG stuff for holding Bitcoin. So there's all these different ways that they're going to try to differentiate, and we can keep going down this rabbit hole of predicting where things are going to go, but there's going to be a lot of jockeying, and we're calling it the Cointucky Derby. So jockeying is the perfect word to use here, because it's going to be fascinating to watch. Like Eric said in the beginning, we've never had a situation where so many ETFs doing essentially the same exact thing are going to be competing with each other. Like it's not like there's not that much to differentiate on. They're all going to hold spot Bitcoin.
According to Eric Balchunas, another interesting way spot Bitcoin ETF prospective issuers will try to set themselves apart from other issuers is by appealing to a specific group. The Bloomberg analyst adds that VanEck's advert seems more appealing to retail and younger investors, while Hashdex and others seem to target boomers. Then, there are others like BlackRock and Fidelity, who already have a crowd of loyal, more conservative investors. Again, the competition is about to get really fierce, and the fiercer it gets, the better it will be for Bitcoin's price. What are your thoughts on James and Eric's submissions about the SEC and spot Bitcoin ETFs? Please drop your comments and observations below. Also, ensure you like this video, subscribe to the channel, and check out our other crypto-related videos. Thanks for watching.
Hey Savvy Finance enthusiasts, massive shout out for being the heartbeat of Savvy Finance. Your support has been the wind beneath our wings, and we can't express our gratitude enough. Now buckle up, because we've got an exclusive deal just for you. Ever wanted a slice of the action? We're offering a golden opportunity to own part of our YouTube channel's potential future revenue. This isn't just an investment, it's an invitation to be a part of our story. Investing means you're not just an investor, you will be a participant in the future of Savvy Finance. No cheesy lines, just a genuine call to embark on this journey together. But wait, there's more. Your mission, should you choose to accept it, become a Savvy ambassador. Share our videos on every platform: Facebook, Twitter, LinkedIn. Your shares amplify our visibility, potentially translating to more views and more YouTube revenue. Here's the kicker. If our viewership increases, we would not be just growing financially. We would be making a tangible impact by spreading valuable financial education. Now the icing on the cake. Invest and you'll score exclusive access to our private Savvy Finance Discord. Here you can chat with Savvy Finance, swap ideas with fellow investors, and be at the forefront of exciting developments. Click on the link below to register your Gigastar account. You can also find the link to my offering page in the description below. Get your Gigastar account ready, review the offering details, and let's embark on this thrilling venture together. To the incredible Savvy community, thank you for being the backbone of our success. Your journey is my journey, and together, we're creating waves. Cheers.